Don't worry. I may post this. I may not. But go ahead. So, do you trade today?
No, I traded yesterday during Asia.
Asia, my man.
It wasn't a big trade. It was something small. Just caught a few points.
You caught sales, or you caught the buy?
No, I caught the sales a little after market opened. I'll tell you specifically where to. Where is it? Alright, if you're looking on the 5 minute, I don't know which time frame you're on. I could explain either one.
That's fine. You can go with 5 minutes. I'm on a 5 right now.
Alright. I bet. So if you look on the 5 minute and you have your, I guess your PM session toggled, price kind of just chopped around on the 5 minute and never necessarily broke structure for the sells to the downside.
What time? Cause I've seen it drop several times. So
it did, but if you look to the left of it, there was really nowhere where it broke structure and it, gave an entry for a fair value gap.
What time are you looking at?
The 5 minute?
No, not time frame. What time? 1800?
No, from 1:30 p.m. to 4 o'clock.
Okay, so from 1:30 p.m. to 4, you're saying it did not break structure to the downside. Okay.
So around 140 through 150, there was a nice displacement on the 5 minute, but there was no structure broken on the left side. Okay. Then it traded up to create a new high at 1425, right?
Yeah.
And then it broke down again. No structure was broken, and then it just kind of played around until market closes. Alright, so there was a drop down again at 4:30, but I don't count that. So when market opened at the 1800, if you were to put a line on that, a vertical line, I just kind of waited for S&T, which happened. Damn, it's so choppy. S&T happened somewhere around 8:20 and 8:30, and then it dropped down. But what's important to look at is the fair value gap that I guess I entered on, which was the 705 candle. Notice how price drove down at 710, but it didn't take out PM session lows on that wick at 710, 1910.
Yeah. So you got in at 720?
Yeah, 720, and then it traded down to take those PM session lows. So it wasn't a lot. Let me see how many points that was, because I only needed $100 for the day to get a payout, but it was 29.5 points. I was in drawdown maybe 3 or 4 points, and then it just ran down there. On the 5 minutes, it looked like it ran smoothly, but in real time, because Asia was literally moving like a turtle, it felt like it took forever.
Yeah, I mean, you had to wait forever for that on the 5 minute. I'm glad you got it though. And that is a very, very decent trade. That's a really good trade too.
I just didn't want to chance this morning because I needed the profit for today to get paid tomorrow. So I just patiently waited while I was chilling. And yeah, that's it.
Gotcha.
I'm on demo right now. I just got in a sell. I'm gonna wait to see what's gonna happen.
I don't know about the sales right now.
That's why I'm on demo. I wouldn't trust this on a real account.
Yeah. What I'm looking at is that okay, so what you still on the 5 minute?
Mm-hmm.
We can do 5 minute. But all right. So if you look at the 5 minute, I'm bearish too. By the way, like I would love some sales. I don't want to get deep down to a conspiracy theory, but well, I'll say this: the market being closed, at least the regular trading hours, it leads me back to that conspiracy that that the banks and the wealth they're using this as an excuse to move money. You know what I mean? And so I'm thinking that the market is gonna dump today. Like I've only seen it do that like I think a couple years ago before Thanksgiving. Like it was supposed to be considered a low volume day and the market just tanked. So I was trying to see if the same thing was gonna happen today. But if you look at alright, PM lunch yesterday 12:30 on the 5 minute. So I
that's 21,166. Yeah.
Yeah. So 160. Yeah. So that low created that new high that was at 1425, right?
Mm-hmm.
Now, if you that same price action, but if you look at the 1 hour. Now go back to the 1 hour, but that same time it looked like a huge wick, right?
Mm-hmm.
Okay. That wick broke structure, and so if you put your fibs on that wick, and I'm doing it as I'm speaking to you too, it came down at 3 a.m. right about 50%. Like it was just a hairline above it. Damn, today's trash day. I forgot to take the trash out. Yeah. So I'm reading this in real time with you. So I look at that and I'm like, damn. So that's a trade that I would have taken in London if I was up for London, but these days I'm not up. So I would have caught probably that buy move and maybe partial or whatever by 5:15. So now there's an inefficiency at 3:25 a.m. and I'm on a 5 minute and back on a 5 minute now because I can go to the 1 minute, but actually let's go to 1 minute. So if you look at the 1 minute, the fair value gap at 325, that's an area of interest. And so had I came on the charts a little bit earlier, that's where I probably would have bought after seeing sell side. And the reason why I would have trusted that fair value gap is because it is in the kill zone. And so if that fair value gap was at a different time, I probably wouldn't have trusted. So I probably would have bought and then try to see if we can go higher. Now the only thing that would make me skeptical is that, and I think I posted this in the group.
I mean, you could have traded that at 906. That's when that fair value gap was retested.
No, I know. I just wasn't on the charts. I would have definitely did it. So there's some equal highs at Asia's high that I definitely want, and it looks juicy. But in the same manner that you had that SMT at 625, it looks like on ES also took Asia's high, its equals high, at 515. So even if I did traded it, it would have been a scalp perhaps, but it's just, I feel like similar to yesterday, you know, price is just like kind of all over the place right now, and it's consolidating. And I'd like to think that as much as, because I think D posted that he has an area of interest last night. I saw it this morning. He has an area of interest above. And as much as I want to go trade, I still want 21,500, right? As much as I want 2,500, man, I feel like it's one of them times where the market makers, they really do whatever the hell they want to do, bro. And I remember in situations where I seen some kind of inefficiency above, I wanted to trade above it, and price will consolidate and then just continue and leave that thing open for some other time later. And so as bullish, and I know we don't talk much about DXY like that, but I just feel like DXY is so freaking bullish, and I feel like general sentiment, everybody wants to buy this dip. Trump is about to come in office and the market's about to run wild, generally speaking, that is, right? I just feel like everybody's trying to buy, and before it does that, the market is just gonna tank. The market is gonna tank. If we look at if we go back to the 1 hour, right? Yeah. I'm talking to you as I do this. I don't know if you watched any of the YouTube videos, and you don't have to. It's just that
I watched the first one.
You watched the whole thing?
Mm-hmm.
Oh, sweet.
I watched it from market open, because in the beginning, you were waiting.
Yeah.
But I watched maybe 60 or 70% of it.
Oh, well, I appreciate that, man. I don't expect people to watch it as really much, honestly, and the reason why is because, like, listen, I ain't got no music or nothing like that, and no background, because I don't want the copywriting thing, and I just realized, like, watching me will be boring for the majority, especially because I'm not as animated. I'm trying to get locked in. But anyways, the point that I'm getting at is that it's a lot of patience for me. If you put your time on a 1 hour from January, I'll just make it simple. That retracement that happened on December 25th, that was about 70% retracement, right? And that is what I think is I don't know if I can share my screen. That'll make it easier. Are you working right now? Are you able to share it? Look at my screen if I share it?
Yeah, go ahead. Yeah, it was a 79%. I do have a theory about that too.
Okay. So you see that? You see my screen?
Mm-hmm.
This is what I think, and I haven't used this in a while, is a reclaimed order block.
I don't use those either.
Yeah, I haven't used it in a while, but I'm like, it makes so much sense because it didn't get to an area of interest that I had, and maybe I'm just wrong about the area of interest, but I mean definitely in this area though, right? Because I wanted to retrace like here or here somewhere, or if we're gonna get up here, why not come up here? And it did it right here. This just made sense to me. So reclaimed bearish order block, or this whole down move could just be seen as a breaker, to be honest with you.
Mm-hmm.
And that'll make it easy in this box. So you have this retracement, which is 70% retracement, and then this retracement here at 10 a.m. on January 6th last week was 79% retracement. And so I think a lot of people that is bearish, it's very easy to assume that we're gonna do the same thing here. Okay, let's go ahead and retrace, right? And that looks really, really good too. Perfect 70% retracement. And I just don't think it's gonna happen, because I feel like if it was gonna do that, it should have happened already. Now you did get this where it consolidated, where here it broke structure, consolidated, continuation, but then on the larger time frame it was just a retracement before going lower. So I get that. And then you had this SMT, which made price continue lower. And let's see, looking at ES, yeah, so ES2 also broke that down, but it didn't displace. So then we retrace, and now we came down to an inefficiency. And I think I'm just thinking the majority of people are gonna try to buy this dip to get above here. I would love if we can just get right here. If we can just get 2,500, because on the 1 hour these are relative equal highs at 5 a.m. and 6 a.m. I hate seeing equal highs and equal lows at 6 a.m. I target them shits like a mother. But it could be one of the cases where it get left alone, and it doesn't need much more buy side liquidity to keep going down. And so that's why I think, is there any news tomorrow?
Yeah, there's news for the rest of the week.
Unemployment. Oh, non-farm payroll, man, because it didn't happen last week. So yeah, day before non-farm payroll.
Tomorrow's gonna be a pretty wide range day.
I hope so, and if so, it's probably gonna. I'm bearish.
But it's NFP, so
yeah. Anything that's after. Let's see. Let me put that back. So, a matter of fact, this is what I hope doesn't happen, but it happens all the time. That the news made the move that you wish you did.
Yep.
So I'm gonna be disciplined tomorrow, and I'm not gonna trade 8:30 news. I would love for 8:30 news to skyrocket and to any of these areas, whether it's here, depending on where we close today, whether it's here or here. I'm just looking to short that mother. Like, that's what I'm gonna do. And then how low can we go? I mean, we have areas of interest. I have areas of interest all the way down to 220, 250, basically. And I would just be using standard deviations from that point. If you look at the 4 hour, and I'm just making it easy to, and this is the last thing I'll say. If we look at the 4 hour, we have this big area of interest here from Friday, November 15th. This whole area that's consolidated is the what is that with the market maker?
The original consolidation.
Original consolidation. That's what I'm getting at. So I think we have market came back to this original consolidation here, and I just think many people are buying this dip, and depending on what time frame people trade on, we have a lot of stop losses here. My ultimate target is these equal lows here below, but we have this original consolidation. We got a bounce here. We got a bounce here. You remember back in the days when we used to trade supply and demand? We talk about how something was exhausted. That could be that. Like, this is an exhaustion zone or something like that. You know what I mean? I just think this area, you know, 1, 2, we just what do you call it, when the, not the drive pattern, but when ICT that ladder, when he talks about that ladder, where if it looks like a ladder, like a phantom, and you have people who are trading below this, they have their stop losses like at the 1, 2, 3. Like if it's a hit 1, is a good chance it's gonna hit all of them, right? So I'm looking at these 3 right here, and this whole thing has been a trend line. You have people who see this probably as a break, and people who trade break and retest, right? And they're waiting for that. So now that's an instance where it looked like it worked, but then the market always does something, man. I just don't think we're gonna go to all-time high right now. But I'm gonna be patient, and I'm not going to trade news. I'm gonna wait, because what if I'm wrong and NFP just booms? We get up here. At this point, you know, anything above this 712, I'm not looking to sell anymore. I'll be looking for buy continuation, because at that point we would have broken, I imagine, so many PD arrays on a 15-minute, and we would have gotten to this 1 hour. So that's my thoughts.
Okay. In terms of I have 2, I guess, biases that I like to share.
Yeah, shoot. You want me to stop sharing? Or you can share?
Sure, I'll share mine.
Alright. Stop streaming.
Alright, let's see Discord. Let me know when you can see it.
Here we go. I can see it.
Yeah, let me use this screen instead. If we were to talk about the higher time frame that you were just referencing, with the original consolidation idea in the 3 ladder thing, so the reason that and this is strictly if you're referencing the maker buy and market maker buy, which was your market maker sell model.
Yes.
So if you consider that this entire range was your original consolidation, I would personally think that it's already completed, that it cleared specifically right here, only because this is SMT with ES. ES did not take this low right here.
Gotcha. Wait. You sure? What time is? What day is that?
This is December 20th. I can actually share it side by side if that helps.
No. That last day where you said ES didn't take that low. Not
December 20th. ES did not take this low. Oh, January 2nd. So that was last Thursday.
Oh, alright, good point. I did not see that. Okay.
Yeah. So if you have that marked, I would say this was your buy drive and this is your sell drive. I personally considered the drive to be completed once either SMT happens at the original consolidation as he taught, or once you get your retracement to, which I think you mentioned that as well. This was here. Price retested 70 to 79, and then it broke this low. So it's completed, in my personal opinion. Now if we go further, and I'm gonna prove my point on yesterday as to why I considered, I said yesterday there was a specific area that I was looking for. And let's see, no, this is bottom. Alright, so we're only gonna focus on this side of price action, right? Now on the 1 hour, this, remember the 79% move that happened right here?
Yeah.
It is the same thing as your breaker that you are considered as a reclaim order block.
Yeah.
Breaker because, you know, this move broke the high.
Yeah.
And
We'll just stick to breaker
Right.
and make it easier.
yeah.
Yeah.
So there's no breaker there, and then the sell move ended right here once the SMT happened. Now here's the beautiful thing, that as soon as the sell move happened, you got this hideous price action to the upper side. If you notice that, again, the first thing that I look for is a market structure shift.
Yeah.
This 1 hour fair value gap was retested, but there weren't any market structure shift. Then you have your extension consolidation, and it did the same thing. Structure wasn't broken until up here, right?
Yeah.
Okay, so we both agree on that. And so once structure is broken and you have SMT, that where price is coming from, this is your breaker. This is your bullish breaker, right? Can you agree on that?
Yeah, that is the bullish breaker because it left with the fair value gap and it retested it before shooting up.
Perfect. So now that we agree, this is also considered as a unicorn setup. This is my A+ setup. I put my whole life in this setup whenever I see it, right?
That's
fair value gap.
That is a unicorn?
Yeah, fair value gap, that's exactly at the top of the breaker.
Ah. Okay, cool.
And on the bearish is the other way around.
Yeah.
Alright. So in price, you know how sometimes price trades deep into breakers? This one, price don't trade deep into it. It is always institutional order for entry drill, meaning that price will just retest the fair value gap and takes off. All right,
So that's why I see that one as an institutional order flow, because if I'm looking at the 1 hour, even though I see it's a breaker now, that's not a breaker that I would catch in real time unless I have it marked up. You know?
Gotcha.
So
the way that I work with breakers is before I get on a trade, I wait for an SMT. And the moment the SMT happens, the first thing that I do is I mark the breaker and I mark the mitigation, both on ES and NQ, right?
to see where it would retrace to.
Exactly, and then I wait for a market structure shift. So oftentimes, when price takes out like a area of interest, I typically say, okay, I'm expecting a breaker here. I'm expecting a mitigation here. I said that yesterday. And that's because SMT was confirmed. So in real time, had I saw this SMT, my eyes automatically went up here. I'm expecting a breaker here. Although price hasn't even traded up here, I'm already drawing the breaker here with a note. So when price trades through it, I'm waiting for that fair value gap to take off.
Got you.
Alright, so price consolidated here. This is important because whenever you have a buy model, when it comes down to the sell model, you gotta mark the original consolidations, right? And we're gonna color this red as original consolidation. Price went up here, and this was also another area of consolidation, and then price went up there to reversed. All right, so let's focus back on the fair value gap. Market structure shifted here. This was the first fair value gap retest. Another thing ICT teaches is the equilibrium of the ranges. So oftentimes when you miss the first move, just wait for it to come back below the 50% and the 62% to trade it. If you look here,
That
If I were
gotta
to
be
draw,
Oh, okay.
yep.
No. I was looking at something else. I thought you was about to go somewhere else with it. Continue.
So I drew fibs here. Though there is a fair value gap, market did not break structure, right? Market broke structure here, and there's a fair value gap there.
That's
It
a break of
never
structure?
actually. Say that again?
That's a break of structure on the 1 hour?
Yes. This is your swing high right here, and it broke above it. This fair value gap was never retested. It just took off. Now, these were news days. There was no fair value gap that was left, no fair value gap left, not until up here. If I were to draw fibs up here, and it retested this fair value gap. Now, if I was a long-term trader, meaning that I'm holding trades for days in a week, I would never get in a buy here, right? Because it's too much at a premium. It's not discounted. Because we're intraday traders, I could use this higher time frame breaker and get in a trade inside of that, which is what I did. Now, when price exhausted and came up here, now that I'm trading the sell side, my eyes is automatically at a discounted fair value gap that was never retested. And this original fair value gap here is also considered as equal lows. You have all of these wicks, and if you look at the price, this low comes in at 21,206, right?
That's what I have, yeah.
Okay. And if you were to look at yesterday when I got in the sell, I don't remember where I mentioned it, but I did get in a sell, and I mentioned that I'm going, right here. Equal lows, 21,000 right there, 200. So this sell was supposed to take me there, but unfortunately I got kicked out. And look, it cleared it right here. The fair value gap has been cleared. So I said all of that to say that this retracement came back to retest this fair value gap that was left. It also cleared this level of original consolidation, and I'm expecting now, if I'm super confident with the buys, I would say that you are going to get the 21,500, simply because as soon as this area has been cleared, price has been choppy around it, and it's refusing to break it. Now, when you mentioned 50% of this wick, this is at 66.25. Let's see, 66.25. 20. So again, liquidity has been swept. This is considered as your internal range liquidity. Swept right here, 79%, strong rejection. Price came back to it and rejected again. So now I don't anticipate price to come any lower than London lows, which is right here, tomorrow or next week. If it does, then obviously my eyes would go down here. But if it continues to trade higher, I would consider this entire thing as a continuation for the buys, and my eyes would be here for the end of next week to trade up into. I hope that makes sense.
No, it does. Here's the only thing, and I think you point out several things that I was not looking at. For example, that breaker, right? I didn't realize the breaker until you pointed it out. But here's what I would say. Are you able to draw a rectangle on that breaker, starting from the body of that candle, from the body to the you can go up to the wick. I prefer when it recaps the body, but you can go up to that top wick. Yep, perfect. And if you draw all that all the way across, and this is just how I trade, right? Draw all the way across, all the way. So if I saw this breaker in real time, this is how I would have this marked up when the sell that you caught, the buy that you caught to continue, whether it's institutional order flow or bullish breaker, Okay, boom. That was a great trade. Because I'm looking at that. I definitely wouldn't call that. Because that was like at 3 p.m. It looks like, I think, right? Where it drops into that on Friday.
This?
No, when they retested that breaker.
Oh, it was during the PM session on Friday, yeah.
Yeah, so I'm not catching that. But it 100% makes sense why it is a breaker. If it fits everything that you talked about, as well as the institutional order for entry drill. Bullish people are looking for that retest. But here's what I'm getting at. I don't recall too many times where, yes, price can retrace into a breaker and it can do a deep retracement. However, once we go this deep, well, first of all, it's not too many times that I see it. Okay, because the whole concept of a breaker is that it's jamming stop losses, right? Because people who probably have their stop losses a little bit higher, and people who are waiting for deeper retracements never get a chance, right? It kind of breaks your back, I think is what he talks about, right? So it breaks you. And so it breaks you, we get this super run up. And so when I used to trade like on a 5 minute often, how I would trade is that once it retests the breaker, it goes up. I would only be looking for a retracement from the point of I would have looked at my second leg, I would say, right, from where that first entry, I would draw fibs from where that first entry of the breaker came in.
From what, right here?
No, from when it retested.
Right here.
No, that's not when it right there. Yeah.
Yes.
No, the black candle.
Yeah, that's what I had over here.
Oh yeah. So I would draw fibs from there to the top that Monday, and then I would be that would now be my dealing range, so to speak, where I would be looking for my second leg. Now that didn't happen, and this is where I thought you was going with, is right where you have that 70%. It just went down, right? That to me looks like a balanced price range. If you look at the fair value gaps on both sides.
Yeah, I see.
Can we get up there? Maybe. But that area is now efficient, and I feel like we don't need to go up there. And so that's one, right? And then two, where you have that, you can remove the fibs now if you want. Now two, where you have that breaker, now we have not only violated it, but now the breaker has become an inversion. Because every PD array, there's an inversion for it. And so now I feel like this breaker now has become an inversion to go lower. So I feel like even in your explanation, you just made a case for me, more reason to continue lower, look for lower prices, and I just feel like, clearly in our conversation, Market Makers has done a great job of creating sentiment on both sides of the market at this point, is what I think. And so it's a matter of, last few NFPs, you can remove the breaker if you want now. Last few NFPs have not been, it's been very anticlimactic, not very eventful at all. And so I'm curious to see if tomorrow or maybe next week, they could consolidate tomorrow, be trash. It could possibly consolidate on Monday and be trash. And you finally use Tuesday, where we finally get out of consolidation and wait for a manipulation. And so this is like AMD on a higher time frame. I feel like, what is it? The market can consolidate longer than you're willing to wait. Is that what it is? That the quote? And so I feel like market, especially being in January, price action could be nasty, bro, for the next week or two, as it just builds liquidity. But I feel like we're gonna get a spike up somewhere. I just don't know how far up and continue lower, bro, or just lower and continue lower. But it's just a waiting game.
Yeah, I mean, January is a sweet spot. There's a reason why ICT waits for so long.
Yeah. Even though he's been trading live, because I get to know. I don't look at his YouTube anymore, but I see I know he's been posting videos for this year's mentorship, and I do look at the community tab when he's writing. So from the looks of it, look like he either they're lectures or he's trading.
I watched the first one, and it is a lecture. But I don't. I like his lectures because sometimes it kind of fires me up and reminds me of my goals, not necessarily to learn anything. Because we've been preaching this for the past year. We don't need anything else. Not really. Again, I only watched the first one. He basically was saying
on the first one, was he jawboning?
No.
Okay.
He basically was setting the expectations, saying that you can make a career out of watching the last mentorship, and now he has a AMP account, and he's going to be showing his monthly statements. Essentially, that's it.
Oh, okay. I'm gonna watch the first one. I don't care about the statements, but I don't want to get into a rabbit hole. Well, first of all, I love when he's jawboning, and if he's talking about like encouraging things, for sure, I'll definitely check him out for sure, because like you said, it does do the whole reminder thing of what we're looking into. So I do like that when he sets expectations, because he knows he can do much more. You know what I mean?
Yeah.
And people who've been following him knows he can too. But anyways, what I will look. I love the fact he doesn't need to show the breaker statements, but I'm glad that he's doing that, because him and this other guy, I think Umar something, I don't know his name. He doesn't trade smart money. Are the only two people that I've seen share broker statements. And
there's another guy that does it too. He has $1 million account that he trades.
Hey, that I'm cool with it. Does he have a mentorship or something?
I don't know.
Okay. The reason why I bring that up, and because ICT started sharing broker statements when he does not have a mentorship. Umar does not have a mentorship. I think he started like a whole trading thing now, where it's more like a trading desk where he have multiple people. But I think he just have an office where he just trade. But to my knowledge, he doesn't have a mentorship. And so like, I talk about this on my first podcast. Hopefully I can get it released this week after all this editing. But you got so many people who's asking people for money, bro, and they haven't shared none of their P&Ls. Or you'll see their P&L for a day or P&L for a week, but a quarter, you don't see that, bro. And they're really making money off of the mentorship. I talk about it in the first podcast where it's like, people are making more money off of the things that they're selling than the things that they're selling about. Flipping houses, like anything.
99% of the trading community, if you're being honest.
Yeah.
And the ones that are making real money, you don't ever know about them or hear about them.
And that's why I'm trying to set myself apart, where I don't plan on starting any kind of mentorship. I just can't deal with so many personalities. Like, I've seen what so many other mentors go through, including, like, you really gotta, like, not give a fuck, I think, to be honest with you, in order to teach somebody. Or if you do care, you have a small community. So I don't know how ICT does it. To have that many people in mentorship, can you imagine if all them students was asking you questions and emailing you, like, it would drive me insane. You told niggas, let me not say nigga, because I'm going to put it up. You told people not to buy. How many times ICT says, don't follow me on this trade, I'm just showing you, and then people just push the button anyway? Can you imagine how if you had students that would tell you like, yo, like they just bought anyways? So I get it when he says, yo, whether you made money or not, I don't want to know about it, because you're just doing stuff I didn't ask you to do. And you're working up my nerves. So I don't want to be dealing with that. And if I was to deal with that, it would be a small group of people, 1 or 2 people, man, because it would just wear me thin, you know, and keep me from not being locked in. But he been doing it for too long. But anyway, yeah, man, I get, you know, patience is the name of the game. Sometimes we don't know where it's gonna go, but we have areas of interest. Clearly you have it, I have it. You definitely showed me some things that I didn't recognize, like the SMTs and the breakers. So I definitely have them marked up now, or at least they're on my mind. And I'm just gonna see what happens, man. Look like with consolidation, we just waiting for a manipulation. If we are ready, if the market maker sell model is complete, then it is just a waiting game.
It is. I wanted to answer something that you said earlier about the second leg from a breaker.
By the way, that was just what my model used to be.
No, it's cool. It doesn't matter. I mean, these are ways that, you know, light bulb moments happen. So, yeah, we talked about the breaker. This was the retest during this phase of consolidation. I wish to note it was also a new week opening gap with this gap right here. You said you normally would trade this on the 70 or 62% retracement. This is why I have side by side, because what one thing doesn't do, the other one always does, which is how SMTs happen to begin with. So when I drew the first thing, ES did retrace to not only the 62 but the 70% retracement.
And that's what I'm saying. That's a buy that I would have had. So for it to later drop on Tuesday, right? Because it did go up, because a lot of people probably was looking for that buy, and maybe on a small time frame I would have caught that. And then you have what? You have then it drops.
Well, it's time. Because again, we're looking at, I think the mind shift that I would probably help you to do is, when you're looking at the different time frames, you got to think that this is not the time frame you're actually trading on. Now, if this was a 5-minute and it retested, you would not be expecting the drop. But this is the 1 hour. What time did it retest to the 70? This happened at 3 o'clock, right before market closes.
Yeah.
Now, when market opens, you're not literally going to think Asia and London is just going to continue to skyrocket. Market resets, right? Once it closes, it resets, meaning that it needs another draw on liquidity. Although the 70% was the draw on liquidity, it needs another one, which is where the internal range of liquidity happens. So you always have your external and you have your internal, and it's all about time.
Listen, I agree with you, and the only thing is, what I'm saying is that even though I trade on a lower time frame, like these like if I was bullish, even if I'm on a 5-minute or 1 minute, that 70%, there'll be a line there, so I'm just aware of that area. So when price gets there, I can go ahead and trade it. So
Gotcha.
even if I did catch it, the next day I would have been looking for a retest for it to continue higher, but it doesn't, right? Now for me, I was bearish anyways, so I did sell, but actually I missed the first sell actually. Well, yeah, so I missed the Monday. Okay, yeah, that's the sell that we both caught on Tuesday. So So yeah, I caught the sell, but that is because I had a bearish bias in mind. If I was bullish, I would have been trying to buy that whole time, right? My old self would have caught a bunch of L's, or I would have ended up catching. You know what would ended up happening to me? I'm gonna tell you exactly what ended up happening to me. I would have been trying to buy on NQ the drop at 10 o'clock. That 10:19. If you look on the 1 minute or maybe 5 minute.
Yeah, I'm just highlighting that area. I'm gonna get to it.
Yeah. And you can look at ES or NQ.
While I'm there, I'm also gonna explain why I sold that day too. But yeah. Alright, so this was the day.
Oh, don't get me wrong. I get why you sold. So don't get me wrong, like, cause I sold for different. I think for a slightly different reason, but I get the sales. I'm just in my mind. If I was looking for a buy, you can go to 10:15. The exact time is 10:18.
Alright, so Monday at 10:18 a.m.
No, Tuesday 10:18. I'm sorry if I said Monday.
No, I just assumed Monday. It's 6. Almost there. 1 minute is crazy. Alright.
So after the sale that we caught, if I was bullish on the higher time frame, I would have been trying. I would have seen the 10:18. You're there, almost there.
Yeah, sorry.
No, you're good, bro. It's the 1 minute.
Alright, so we have 10:18.
Yeah.
Okay, I see right here.
Right there, right? I would have my setup, if that was my area of interest, I would have bought, I would have seen the 10:18, I would have seen from the run up from the 10:18 to the 10:26, that I would have seen that up move as a reversal, and I would have then drew my fibs there, and I would have been trying to buy anywhere within that 50%. That's what would have happened if I had that big time frame area of interest as a bullish. I would have been looking for this area as a sell, and of course that would have been an L. But that's where I would have been trying to buy, and I honestly would have probably had either limit order or executed right at 21,580, because then I would have also seen the 10-12 candle as a bullish breaker on the 1 minute.
I see.
All right, and then that's one of those cases where I would have said, if it does drop down to the 70%, maybe that's a deep retracement, right? But it doesn't happen. I would have been on the wrong side, and it continues selling. I was off the charts anyways, but and I see why it's so. Listen, I mean, I'll let you into it because I don't want you to feel like I cut you off. But I've seen so many other reasons for the sale. But if hypothetically had I had a bullish bias, maybe I would have caught the sale as well, but then I would have been trying to buy from here, and I did not.
Okay.
You want to explain why you sold?
Yeah.
Okay.
Alright, so I'm gonna start on the 15 just because I think it's better.
Yeah, it is cleaner. I'm on it.
Alright, so this was the day.
Hold on, by the way. Hold on. Sorry to interrupt. Hey, come on. I just put a dog in a cage because he ain't eat all morning, and I just realized what time it is. All right, continue.
All right, so side by side, in the past, I would say in the past, the reason you would have bought the 62 to 70% retracement on NQ, but it never gave you the opportunity. And then on ES, it did give the opportunity right here. Now, my reason, this one doesn't have it. Let me see, copy and paste here. Wait, honestly, it does. Yep, it does. All right. So my reason for wanting to sell that day, I didn't even see the higher time frames. Like, this is what goes through my mind when I wake up. When I log on the charts at around 8 o'clock, my eyes automatically goes to PM session highs and lows and London highs and lows, right? So let's say I got onto the chart at 8 o'clock, and I'm gonna mark 8:30 because that's significant to me. But at 8:30, I opened my laptop and I noticed that London high hasn't been taken; it's intact. So I'm just like, oh, perfect, liquidity sitting. But if you look at 8:30 for the same thing for ES, London high was already taken, right? So that already scratched it off for me. That means that this liquidity no longer matters because it was already taken before CME opens. Now my eyes goes to PM session high. ES PM session high has not been taken. It's sitting there. So I'm like, oh, all right, perfect. So that's going to be my drawn liquidity. But then you look at NQ and it's like, oh crap, Asia open actually took out PM session high. So it's like, all right, great. So now we have two things. ES has PM session high that hasn't been cleared, which is perfect. So my eyes automatically goes to what took out PM session high, which is Asia. That was really weird.
That was it?
Nothing else. Simple as that. And it took me literally like the last 7 months of 2024 to realize I don't care for the daily or the weekly. It's all about the last 3 sessions. And this is never the same on 80.
You said the last 3 sessions or the last 3 days?
Yeah, meaning PM session, Asia session, London session.
Gotcha.
That is all that matters to me. Again, this is only for my particular model, which gives me a setup every single day. It's never going to be the same thing. Oftentimes, I wake up at 8:30. Oh, here's another thing: the 8:30 run has to take out the liquidity I'm waiting for. It have to. So if I wake up in a day and all 3 sessions have been mitigated, I'm not touching the charts at all. That's how I know it's going to be a crappy day, and that rarely happens. Now, on the easiest day, I wake up, London is not taken, boom, it takes London and it runs. PM is not taken at 6 p.m. and it runs. Whatever the case may be. Those 3 sessions, the combination between them has like maybe 25 to 30 different ways that my model can present itself. I just have to wait for the perfect opportunity. So when I waited till 8 p.m. and London was taken, I was chilling and I didn't want to trade any sales simply because ES had already taken London before 8:30.
Yeah.
My eyes now went straight to PM session as my bread and butter. And like I said, Asia took it. So now the drawn liquidity for me is Asia high for NQ. And it would be PM session. And I can go back to the chart where I said this and I show it way before time. Because I think I mastered it. And then once that happens...
Check marks. Shout out to the check marks, man.
Yeah. And then once that happened, I just... and it happened right at market open. And then I just dropped down to the 1 minute and looked for the setup. And it's just like, when that light bulb went off for me, bro, I'm just like, Jesus, how is it that I haven't been successful this whole time? and that was the day. And the last thing that I'll show, and then I'll end Tuesday. Boom, boom, boom. It was right here, and this one was on Tuesday as well. Although here's another thing that my model goes into. Although there is a higher time frame SMT, I also require a lower time frame SMT on the
For confirmation?
for confirmation on the time frame that I'm trading. So if I'm trading the 5 minute, I want to see, although this has been broken, I want to see an SMT on the 5 minute before I enter. If I'm trading a 1 minute, which in this case, I want to see an SMT on the 1 minute, right? So I would have gotten in the trade right here on regular time, or sometimes I still do, but the thing is they both have a breaker right here and right there.
Wait, you would have gotten a win? The first
I would have gotten in the trade after this displacement, and I would have gotten in the trade.
Oh,
sorry?
Okay. No, go ahead. I thought you got it. You would have got in on the first leg, which I said I was just seeing mindset.
No. I wouldn't, because I also require the SMT on a time frame that I'm trading. So this is the higher time frame where liquidity was cleared. But the reason I would not have entered on any of these fair value gaps is because this low right here at 921 expanded and there was no SMT. They both did the same thing. So once price did this, although this held, it never broke this high, which is good. But my last confirmation is the SMT right here.
So you waited for that SMT to happen and then entered?
Yep.
Hey man, kudos to you. Did you do it as soon as the one candle closed, or did you wait for a break after that?
Well, as soon as this closes and it runs down, if the range is really, really small, to answer that question before I continue, if the range is really, really small, meaning my stop loss to take profit, in this range, there's only 15 points, and with one contract, that's what, $250 or $300. So I would just enter on the close of this candle or when it broke structure. But if it was a longer range, I would have waited for the 22 model all over again. But in this case, because I know that price wouldn't reach back up here, as soon as this happened and boom, we had a big candle right here that closed below that, it's an easy entry.
Gotcha.
And the fun thing is, this same entry is back to the original entry I would have gotten in anyways, which is also, this is the unicorn model, because this is your breaker and this is your tiny fair value gap right there.
I'm not gonna lie, there's so many setups in that one area.
There is.
There is the breaker. It's also 70% retracement. There's also an inversion fair value gap there as well. But I say the main reason why I even look for sales was, it's crazy how so many people could trade ICT and still have different ways of trading.
That's what he said.
Yeah, he said that. The main reason why I looked for sales was, number one, I had an area of interest. And honestly, I would have sold the first leg right at that tip up, but my stop loss would have been higher. And the only reason why I didn't, and because I said that 2025, I have to be okay with missing moves, because too many times learning ICT, you get to a point where you see so much and you know too much, and I feel like you try to pinpoint every single reversal. That's why I don't trade turtle soups. You know what I mean? Because if you catch it, great, but then you feel like you can catch the next one, and I'll probably catch one out. I'll go 1 for 30, bro. You know what I mean? Thinking I had an area of interest, and before I wait for confirmation or something like that, I'm already in a trade trying to be like, yo, I got 2-point drawdown. And so, number one, I'm okay with missing the move now. So I have the area of interest, and if it goes down without me, then it just so be it. But so number one, I have an area of interest inside of the daily. If you take a look at the daily, and it could be honestly ES or.
I'm gonna drive the point home. They just ended there.
Okay.
That was the same day that I traded ES.
Yes.
And I have the chart side by side. So, and this was a $4,000 day because I was so confident in the trade.
Mm-hmm.
So this what happened on NQ. And as soon as, remember I told you, as soon as NQ took this high,
Mm-hmm.
ES did not take that high,
Mm-hmm.
and then that candle closed.
Mm-hmm.
I was able to getting, I think with like, I don't know, 7 or 8 contracts on ES. I don't remember.
Yeah.
And then from there, the previous day PM session liquidity, which again is something that I would live and die by, that's where I had exit, and to call it a day. And this was a pretty big day too.
Oh yeah, it was a big day. I saw
look what it
after,
matches with.
yeah, I saw after the fact why it went as low as it did. You see how you have your standard deviations?
Mm-hmm.
Do the same thing on a 15-minute.
I was just about to say that. That's only because I was trading the smaller
time
thing.
frame. Yeah, if you do that,
Yep.
it does the same exact thing. But I'll say this: that run up. If you look at the daily time frame, you can look at ES or NQ. Is the same thing. That's my setup on a daily time frame.
That was
is the midpoint of that fair value.
Oh, I see. Of the fair value gap. Yeah.
Yep. And so I saw that. Oh my gosh! And you already know how I draw my fair value gaps.
Mm-hmm.
So yeah, bro. Oh, you know what? Do yours. You see where it says set? Which one? NQ.
What do you mean set? Oh,
On the
this day
bottom?
right here
No.
on Tuesday.
You see where you have the time UTC 10:30 with a clock.
Yeah.
Hit set. So
I did.
so you see the difference, right? So ICT
No.
teach. Press it again. So where you have that daily fair value gap, when it in this method, it does not have the volume imbalances.
So when I hit set,
It includes the volume imbalances, and so I always used to be
I don't know
like,
that.
so I always used to wonder. Now sometimes it does it vice versa. And I think I asked this question plenty of times, and I saw people online like, when do you use the settled price versus the unsettled price? And man, it's one of, you know how you listen to ICT and he doesn't reveal it until like an hour into his lecture, like
Yeah,
the
he
real
does it on
gem.
purpose. I hate that.
Yeah, what he said was he flip flop between them. He uses the one that shows volume imbalances, and so if in this method it showed the volume imbalance, then he would have it set. So I try my best to follow that method. Anytime where I see the volume imbalance, that's where I am using. And so of course I draw my fair value gaps including the volume imbalances, and then both of them, ES and NQ, touches that midpoint perfectly. I mean, to the tick.
Mm-hmm. So that's the set is the same thing as the electronic and regular trading hours on the lower time frame.
Now that I didn't know.
Yeah, because here on the lower time frame, it's electronic or regular, but once you get to the daily, it changes to set. It's the same thing because you can't really see the new day opening gap in the daily unless you hit.
Oh, so the
set right
settled
there.
price is the regular trading
It's
hours?
Yeah, that's the new day opening gap. And I'll show you an example. So, set right there. Let's say, let's just use this one. This orange one Damn it. I hate when that happens.
That freaking makes
It doesn't have to be
sense.
perfect.
Did you always know that, or it just hit you just now?
I literally just found out. So this orange one, okay, that's a new week. So that one is different. What's a new, okay, this is a new day. This right here, let me see if there's a difference. So it's still an orange line, and hit set, there's no orange line anymore. It overlaps it. So it's the same thing as a new day opening gap. It's from regular to that. This one right there, that's what it does. That's crazy.
That is crazy. Look at that. An hour into our video, we're an hour and 10 minutes, and I'm pretty sure if nobody listens to this, they're not gonna catch that.
That's exactly why I'm like, I toggled it, I'm like, what the heck does it do? And then my eyes went to the small gaps. I'm like, okay, all of these are small gaps. Now the bigger gaps is Monday and Friday, so that's a new week opening gap. That makes sense.
Yeah.
But you look at the other ones as a small gap, and once you hit set, the gap is gone. So that just means that it's electronic and regular.
Wow.
But carry on, my bad.
Nah, you got it, bro. I just used it for analytical purposes, but then I didn't see that behind it. But it makes sense too. So.
Yeah. So right there, the gaps are all there on regular and electronic. It's not. Yeah. So now maybe that makes your process a little easier. Yeah. Now you can skip one of the steps that you used to do.
Nah. It's gonna add a step.
Oh, go ahead. Well, go ahead. You were talking about the perfect retest of the 50% right here.
Yeah, so it did that on the daily, and then so I was just looking for sales, and then on the 15 minute and 1 minute, I had an area of interest, and it hit it, and so what I wanted to do.
And you did mention this Fair Valley gap too.
Yes.
Right here. I remember that conversation, and I told you I like it better on ES, which is what I traded that day, the trade that I showed earlier. Which did have this highlight.
And on the 15, on ES, it hit it perfectly, and that's why I say I look at the higher time frame, because on the daily, they both hit it perfectly, right? So if I was trading on the higher time frame, I would have sold exactly at that tip where it entered that fair value gap, and my stop loss would have been the top of that fair value gap, the wick on top of that candle.
Yep. This right here, we're talking about that
right there. So that's why. So I wanted to, and honestly, it would have been worth the risk, right? Now, if you flip back to the 1 minute.
That's 35 points, so that's 550.
Well, I was trading micros, so I think it was like a $200 risk or $160 risk or something like that. I think like 1 or 2 micros. It wasn't that much. But go back to the 1 minute, and this is something that I probably don't that used to plague me and didn't plague me anymore. So I would have sold exactly at that tip, which would have been low-key the turtle soup, right? Did you keep that line where that stop loss would have been?
No.
No, all right, no problem. It's okay.
The stop loss was at 35 was the stop loss. I remember the exact number.
Okay. So the only reason why, I'm gonna tell you, this just goes into my mindset, right? Number one, had I traded there, had I got in right at the tip, pause, and then I got to that stop loss, right? I sometimes second guess myself because
when it's tracing back up.
Well, that too, but I'm gonna get there. I would have entered there, and it could have went near my stop loss, and not actually reverse until later, right? But let's say I did get in, and then I did catch this drop. I would have been, yeah, man, I caught the reversal. And then I would have started second guessing myself on that retracement. I mean, the thing is diabolical, and I think I talk about it on the video too, right? I'm over here pointing at the screen, thinking I'm looking at you, but you don't see it. But I would have been like, damn, man, why didn't I take partials? I sat there, I caught this whole move, and now I'm over here. If I lose, then I regret that I lost money, right? And so now, because and this is what gives me confidence, because I looked at the higher time frame, I was okay waiting for this retracement and not have the fear of missing out, because too many times I've either and I talk about it too, I could have got in at one of the lower fair value gaps, and I don't know if you've ever done this. Like, damn, man, I should have gotten that trade and I didn't. So then I do get in, and then my stop loss is at that wick where the entry is, right? And now, because I chase price, I'm now deep in drawdown. And if it goes back in profit, great. But if I end up losing, it's like, damn, man, I should have never chased price. And too many times I've chased price and ended up losing. And then also too many times I end up closing the trade and wishing I held and it never hit my stop loss. And so in both of my videos, in the first and the second one, I end up saying like, yo, I think we talked about this too, where how many times where we've either entered the same trade idea multiple times and just take multiple L's in the same area, and I go back and I review my executions like, what the hell was I doing? Why didn't I just leave it? And then you're so scared of losing money, or you're so scared of being wrong, and you end up losing way more than if you would have just been wrong one time. And so I constantly try to remind myself, like, yo, I don't care, even if I slightly over leverage, right? Which I try, and I'm going to try my best not to. But even if I miscalculate and I slightly over leverage, it's still cheaper to be wrong one time than to be wrong multiple times. And when you have a live account and you're paying those commissions and clearing fees, you don't want to be in there scalping all day, like 2, 3, and be wrong at the same time. You know what I mean? Because even when you write, if you write on the 10th try, if it's a prop firm, first of all, you probably met the daily drawdown. And if it's your futures account, even when you write, all you did was pay back all, you probably might be at break even with all the commissions. So yeah. And I realized the difference between AMP and NinjaTrader too.
What's the difference?
The main difference that I realize is that AMP doesn't take your commissions until the end of the day. And I assume that all the brokers were that way, because what it sort of kind of allows you to do is it allows you slightly more leverage because it's not taking the commissions right away. I don't know if that makes sense.
It does.
So I would usually, on the AMP account, I would get daily statements at like around midnight, and like those days where I used to like take a whole bunch of trades trying to make my money back, and then you think, okay, I didn't lose that much, or I'm back at, and then around midnight they take all their commissions and clearing, and you're like, damn, you know what I mean? Because you took so many trades, it got eaten up. Whereas NinjaTrader and Tradeovate, it takes it as you take the trade. So that thing, it takes its money out first. It's like Uncle Sam. It's going to take his taxes first and then let you whatever.
Yeah, that's true.
Yeah.
But you can connect AMP to NinjaTrader though, right? Through what fee do they use? Do you know?
I can if I use Rithmic.
Okay.
So with AMP, you have the option of using CQG and Rithmic, right? If I use CQG, which is what I was doing, I could just trade on TradingView directly. which is what I prefer. If I'm trying to connect multiple, then I would, from what AMP explained to me, I can't just say, hey, use CQG this month and then the next month use NinjaTrader. What I would have to do is wait till the end of the, or I can't use them both simultaneously, I should say. I would have to either wait till the month ends or just open up another account and then pay for the Rithmic feed, and then I could feed it to NinjaTrader. I don't know. I just didn't do it. I just left the AMP separately.
So right now you're trading on the Rithmic account or the CQG data feed?
No, so I use the CQG data feed and I just trade that on the side. But what I'm trading for the sake of the live stream, I'm actually using NinjaTrader, Tradeovate. So
Gotcha.
Yeah.
The reason I'm asking is because I'm gonna fund both my AMP as well as my NinjaTrader, which is Tradeovate account, and I just wanted to know that not to have any issues.
Yeah, there won't be no issues, and well, I haven't had any issues in either, to be honest with you. It's the prop accounts that have all these updates and stuff like that. Like, you don't have those issues with NinjaTrader directly. What ended up happening is I prefer AMP, to be honest with you, only because I can drag my stop loss, and just like I do just like you do on the paper trading account for TradingView. So I prefer.
There's a way to do that too, by the way.
On TradingView?
Trading, yeah. It's just a little bit more of a process, but if you're actually setting a limit, it makes your life easier. Do you care if I show you?
I would love for you to show me. Wait, hold on. Oh, I was going to say, if you're going to log into your account, then let me remove your screen.
No, you're good. I'm not.
Okay.
Alright, so you have to hit this trade tab. I don't know if you've ever used it. On the bottom here?
I never touch it.
Yeah, it's going to come up on the side. So once you hit trade, it gives you your order right there.
On TradingView?
If that makes sense. Yeah. Just hit trade. It comes up. And I mean, if you're buying or selling, it's up to you.
Can I only do it with the limit order?
Yes.
Like, if I'm in the trade and I hit trade, will it still give me?
No. Then you just have to set it to market instead of limit. You have your stops, your limit, and your market.
No.
So if you want to do it.
What I'm saying is, let's say I'm already in the trade.
No, I don't know about that. I haven't done that part yet. I see what you're getting at. I don't think so.
I'm going to try. Because usually when I do execute, I execute on the top left-hand corner.
Yeah. From right. I think that off is just too much.
Yeah. So I execute using that button is how I do it. And then I end up just putting my buy stops and sell stops. But if
it works.
I mean, it works. I mean, I'm confident in the trade, so I don't have a problem. But dragging is just, I guess it could be aesthetics, right? Like, it's not that big of a deal, but I do like when I can just drag it. And honestly, you know why it's not that big of a deal now? It's honestly because I'm just more confident in my trade. Before, I wanted to drag to my stop loss just in case I was wrong in that thing. And especially if you're trading like news, you want to hurry up and put your stop loss in case you get rammed. You know what I mean? Pause. So, yeah.
Honestly, when I'm trading on TradingView, I do Shift S for instant sales or Shift B for instant buy. I don't know if you knew that as well.
No, I did not. You know hotkeys?
Yeah, if you hover over it, it tells you buy market Shift B, sell market Shift sell.
I haven't paid attention. So Shift S and it'll just sell instantaneously rather than me have to push the button?
Yeah.
You know, I wish the market was open right now on demo.
Just set a reminder to do it later during Asia on your paper trading.
Yeah, because what I'll do, it just makes it quicker, so I don't have to move my mouse. But usually, once price is in my area of interest too, like I'm hovering over it. I'm also hovering over it when I'm thinking about closing too. But
For instance,
yeah,
if I'm right here, if I have this fair value gap I want to enter and price is down there, all I do is I hit trade, either sell or limit, sell or buy, and because I'm selling, it turns red. I just close this. Once it's closed, I can set this here, set my stop loss, set my TP, and then that's it. It sets the limit.
look at that. Look at that. Well, that's definitely good to know, bro.
Hit trade and then just X that out to get it off your screen, and then you can drag it. It's the same way as if you're doing it in demo. Tradeovate will do the same thing, and then you gotta remember to hit sell though. Hit sell, and then once it shows your prices, then obviously that's how you know the sell limit with this little thing.
And it shows the amount too that you're risking on trading.
Yeah, it shows all that. Yeah.
Now that's a game changer. Because when I have my buy stops, somebody watching this is gonna
It
laugh.
changes though. Once it enters you on the trade, it's only gonna show
The buy stop.
buy limit and sell stop. Yeah.
I mean, that's fine, right? So what I do is sometimes, because I don't calculate the exact points, I'm just looking at like structure. I have a demo account on another screen where I actually do exactly that, or sometimes I just enter the trade on the demo even if I haven't entered it. Like if you ever looked at I don't know if you pay attention, but if you look at my videos, you'll hear some of the executions in the background, but you don't see the execution on the screen. It's just because it's demo ideas that I'm trying on the background, right? And so I'll have it on a different monitor, show me exactly how much I'm risking, and then whether I'm trading micros or minis, I'll just do the same thing here. But that definitely helps. I mean, for the most part, I'm only using 2 micros right now anyways as I build this account, but that definitely is good to know, because I might switch it to say, yo, let me just do 1 micro depending on the setup and the range. So you just opened up my eyes. I learned something. See, we could have these kind of conversations when the market is closed. You know, when the market open, I'm trying to be locked in.
Yeah, I mean, I do these things in the background, I guess, since I'm no longer trading, just try to learn something new. And sometimes my eyes just go to one where I learn it by mistake too. Because I remember I typically have this bar with my favorites down here. I don't like it on my screen. And then I'm like, or if I'm recording, I typically just put it here. If it's Tradeovate or paper trading, and then I'm just like, wait, what is this? So I hit trade. And then I'm like, oh, this is just like NinjaTrader. You have your market limit and your stops. And then I noticed it came up on my screen.
Yeah.
And so I was like, oh, I can drop this. And even when I close it, it's still there. And so I was like, oh crap, let me just use that instead. And it makes it easier.
Well, that was definitely helpful, for sure. For sure, bro.
Alright, I'm about to go get ready for 11 o'clock meeting, so I'm gonna jet.
Alright, do your thing, man. Have a good one, bro. You say you don't mind if I post this, right?
Yeah, go ahead. We can do this every day if you want to, so it's up to you.
Well, you know me, man. I like to be locked in when I'm actually trading.
We can do it after the fact, after we both get in the trade, and we can review after, but it's all good.
Alright, yeah, we'll do it. It won't be every day, but we can definitely do it. For sure.
Alright, cool.
Alright, bro.